Hi traders, this is a video from Elite Currency on euro-dollar analysis. This is Chris speaking, and this video is more intended for beginners, although of course everyone is welcome and I think it is beneficial for all traders basically. But we want to also offer a slower kind of explanation of our views for traders that are starting out recently, a year ago or so, 6 months, 3 months, etc. Just to break it down in more understandable steps, because when we were speaking to some of the traders that just started, our forex market analysis was sometimes quick and it was sometimes difficult to follow. So that gave us the idea, like, maybe we should be also more, of course, helping the traders that are just starting. So we're going to take a look at patterns, trend, and support and resistance on the euro dollar. All right, so first of all, on the euro dollar, this is the euro dollar chart, and we're specifically looking at the monthly time frame, which means that all of these candles represent months. We have a MACD at the bottom for an oscillator that indicates divergence and the direction as well. We have two moving averages, short and long-term. Short basically indicating the 34 EMA close, 144 EMA close is the long-term, just to get an idea of a momentum and the trend. So we have Japanese candlesticks on these charts, and each of them showing kind of info of that month, of course. We're seeing the euro dollar monthly chart. It's good to, at the beginning of the month, take a look at the monthly candles, and we see that the last month was a doji, or, well, not even a doji, it was a slightly bullish candle. We are in a bullish momentum when considering these bullish candles. Look at these candles here. There we go. Bullish candles after another, higher highs, higher lows within these candles. So there is a trend here to the upside at this moment. Price has also broken above resistance levels. If you put it like this, you can see it broke above that. You also see a break above this resistance like this, and even like this. So all resistance broken. Price is in an uptrend. Was in a downtrend in the past, now in an uptrend. So from a weekly perspective, we see this even better. We see the uptrend even better, as you can see. And basically, price going to the upside like this. There we go. Good trend channel at this moment, like this. And you can see that, there we go. Price is retaining its speed to the upside. So last week, we didn't have a higher high. We had a lower low and a lower high. So that could indicate some kind of potential retracement at this moment. But it's still a very early, basically, warning signal. And, that was 2 weeks ago. Last week was actually an inside bar, more or less, with a small bullish close. So there is a bit of an indecision in the last 2 weeks. Before that, there was a strong uptrend. Now there seems to be a retracement going on within this uptrend. So if price were to break below this support level right here, right, like this, we might see a bigger retracement occurring right there, this kind of support zone. And we might see a bigger retracement occur. What kind of retracement could happen? Well, we could put a fib from the bottom to the top like this, right? And price could go down to the 23.6 fib, maybe the 38.2 fib. So that's when the price breaks through the channel and through last week's lows, the support zone. So that's something to keep an eye on. When we zoom into the daily chart, we can see the support kind of better, the support zone. And you also see the sideways zone a bit better, right there. You can see price basically going sideways between support and resistance, and it's making an expanded correction within this uptrend. You can see the uptrend channel very neatly moving to the upside, and now basically making a pause within this channel. So what I'm expecting is two things. Either price is, on a daily chart, price might actually be retracing a smaller leg, maybe something like this, for instance. No, I was using this fib, I think. Yes. All right, so we can use this fib too. And you can see that price neatly respecting the 23.6 fib. So basically what could happen is that if price breaks through the support zone, we might see a break, pullback, continue to the 38.2 fib. This is a small zone, about 140 pips, which is not tradable on the daily chart. So if you're a swing trader or long-term trader, this is not interesting for you. But if you are an intra-week trader or intraday trader, this could be something of a zone to look for, right? On the hourly 4-hour chart, break, pullback, continue down to the 38.2 fib could be interesting. If you are, have a more longer vision, or even an intra-week trader, will be interested more in trading it from the 38.2 fib, in my view, to the minus 272 target. So that could be a with the trend setup, right? Now you might be wondering why, because the trend channel is getting broken, and that's a valid point, and that's something we need to be careful. So when we do have a break, there is a potential bounce at the 38.2 fib, right? But why? Because of the horizontal support on the left still. So the channel is one thing, but the horizontal levels are also something still to be cautious of. Plus the fib. Plus the overall structure is bullish. Even if the channel were to break, the overall structure, this could be a wave 4 pattern, and those tend to be slow, choppy, and corrective. And then this kind of pattern could happen like this, and we could get a bull flag, and that could still be bullish for more upside. So typically wave 4s could see breaks of channels like this, but still be bullish in their nature. So as long as price stays above this 38.2 fib / 50, it's still bullish in my view up to 122.50 in fact. If it breaks below the 50 fib, then I would be below 116. I would be more cautious, and this could be more bearish than I anticipate. And of course, we will follow price as it moves along to keep these analysis up to date. So basically, there are two main scenarios in my view: a bounce at the 38.2 fib for upside continuation, or price just goes sideways, right? So let's zoom into the 4-hour chart now, because if the price goes sideways, right, like this, you can see price has been already going sideways for quite a while, right? Then this could be a support zone. Let's take this channel away for the moment, all right, and let's focus on the sideways zone at this moment. So let me zoom in. And when we zoom in, we see, in my view, the A, B, C correction. Now, this is something we discussed already here, in fact, that this could be an ABC. That we said, hey, look out, this could be an ABC. Hey, look out, this could be the end of the C. So just to give you an idea about the strength of wave patterns. Of course, wave patterns are great to analyze the market. They're not as useful to trade the market, which is why we have our SWOT system, ECS.SWOT, that actually simplifies. It's called simple wave analysis and trading, and that's why it's suitable for beginners as well, for all levels, because it translates the analysis into simple decisions based on indicators. So we don't have to know the wave count to actually trade the waves. And this is not only valid for me, but also traders that are trading the system who have just started, right? So basically, I think that here I said this could expand into a bigger correction, which is doing, right? ABC up, and I wouldn't be surprised if we see an ABC down again, all right? So this is an expansion of the correction, and it is one disadvantage of that is that it's difficult to trade expansions of corrections because they can last longer than we expect or last shorter than we expect. That's always difficult. That's why we need to set up invalidation and confirmation levels. So for instance, a break of this resistance trend line would indicate most likely that the correction is over, and we would expect a breakout with the trend to the upside. A breakout to the downside, as I already indicated, would have space, but only to about 117.50, 117.20 before bouncing at the 38 or reaching the 38.2 fib, which could be a bouncing spot. But within the range, because if we connect the dots, right, and we connect, for instance, these bottoms like this, we are in a triangle pattern. Higher lows, lower highs. Price is not breaking for higher highs or lower lows. And you can see that basically, price is in this range and can stay in this range. So I think that if price makes a hook back like this to test this zone, there could be a bounce, a failure to break for a high. And if there's a candlestick pattern that shows a bounce, there could be a move down to support. All right. So one of the trade ideas for myself is a bounce here to the downside, a bearish bounce to the bottom of this channel from about 119.75 down to about 118.75. Of course, price could break. If it does, I'll be looking for bullish candlestick patterns on a 4-hour chart to trade this breakout. If it bounces, I think a 1-hour chart could be enough to trade this downside bounce. All right, and once price does get down here, this could again be a bouncing spot for upside. Here too, we'll be looking for 1-hour candlestick pattern at the support, or a bounce, pullback, and continue. The breakout to the downside, I'll be looking for probably a daily chart candle or maybe a 4-hour chart. So we saw breaks already within this range. Let me show you. We saw a break here to the upside very nicely. We saw a break, in fact, we saw one here. That was nice. We saw a break, let's see, of this resistance, and we also saw a break of this support, right? So now we have a new break of this support like this. So let's zoom in again, as you can see how trend lines are helping. So that's why I think there is a chance of continuation, but I would like to see a little bit of a pullback before trading it to the downside. So this is a trade within the range. It is technical, more advanced, more difficult. I'm explaining it, but I don't think they are very particular good trades for beginners. I think that if you have a little bit more experience, I think it makes sense to look for shorts and longs here within this range, but they are difficult trades. Eventually, though, the better trades are bounces at the 38 to the upside if there's a confirmation, or the breakout to the upside with the trend. So that's the position of the euro dollar at the moment. Rangy, corrective, but within the trend, and I therefore think that this is still a retracement for one more upside. And unless there's very strong price action that breaks below the 38.2 fib, bearish price action, I would not change that kind of bullish view for the moment. So more help to start with your trading analysis and decisions. Take a look at elitecurrency.com, where we have our ECS.start package, or you can sign up to, of course, receiving these updates on a daily basis. You can do that on our website. Thanks. Hope that you will join us soon, and wish you all great trading. Cheers.